Okay, so next part here, let's look at learning objective 6. Um, I'm just going to skim over this one since it's a lower priority, but just recognize that auditing these objective areas takes a little bit more care and approach than some of the other areas. Um, so thinking about estimates, basically we can review management's process for developing them. We can independently come up with our own estimate, right? So let's say you have bad debt expense. Auditors may come up with their own estimate of what uh, bad debt expense should be and then compare that against management's estimate. We can look at the subsequent events to see how good that estimate was, right? So let's say you have bad debt expense. That's an estimate that's happening every year. And then what happens the next year is the company actually has bad debts, right? They have debts that they have to write off, and so we can look to see, for example, how good our estimates, our management's estimates in terms of predicting the future, and if they're constantly under predicting bad debts, for example, then that would suggest they need to increase their estimate, right? Um, Fair values is another area that requires more care. And you talked about different fair values, I believe, in one of your intermediate classes. But if not, there's the idea is there's just multiple levels of coming up with a fair value. The best level is having an active market for an identical asset. Um, so let's say you've got financial, the client has invested in stocks, right? And those stocks are publicly traded. Well, we can see what it's worth, right, based on the current stock price. So that's kind of the highest level of fair value. Um, Second level is when we have um, inputs of observable quoted prices for similar assets or liabilities. Um, and so there's an example where you have some publicly traded debt securities, uh, and they can discount their future cash flows based on that, right? So that's a second tier level of input. It's not the same asset, but it's a similar asset. And then level 3 is kind of the worst level of reliability for a fair value estimate, and that's when you can't really observe the inputs in the sense of they're not, uh, you can't correlate them with anything outside the firm. So, for example, Enron, one of the things they did was they basically took an estimate of what they thought the profit was going to be on a contract, and then the moment in which they signed the contract, they also booked the profit, right? And that was using their own internal estimates, which turned out to be very, very unrealistic, and caused that's what caused a lot of the initial problems. Is you had this profit that was being booked, and then um, you're having some bad outcomes after it. Related party transactions are another area um, that require some additional care, and so you're going to look for any conflicts of interest, any related party. You're going to look for transactions that maybe have some unique characteristics. Maybe, for example, you'd look under cash flows. You could look to see are there any checks that were written to managers that were not uh, their compensation, right? So maybe they are giving loans to managers. Then that's a related party transaction that's going to have to be disclosed. Um, and you're going to look for, especially looking for lack of arm's length way in which those transactions are conducted, right? So if they're giving managers sweet loans with really low interest rates, then some of that forgiveness of interest really becomes compensation, right? And so we just need to be careful as auditors for those kind of transactions. They're riskier because again, it's hard to have an arm's length transaction if you have a related party, right? It's not the same terms you would have given if the party was unrelated, and that's really kind of the key there. Um, Looking at learning objective 7 uh, and audit documentation, I've heard this comment from some recruiters firms that come and recruit is that students don't understand documentation enough, and you're also going to get trained on how to do documentation for the particular company that you might work for, um, but it is a significant area. So what's the purpose of the audit documentation? Well, one, we have to show compliance with standards, right? That's kind of the legal check the box reason. But the bigger, I think more important reason is that it supports the opinion, right? Remember, we're trying to manage audit risk, and you manage audit risk by making sure you compile enough evidence to support your opinion. And so the audit documentation, the auditing work papers, those are going to be the sources that kind of prove whether uh, your opinion is actually supported or not. Um, and so some additional functions are basically helping uh, the audit team plan and perform the audit, right? One of the most common things you'll hear is, well, what did we do last year, right? And let's see about either doing the same thing or thinking about how or why um, we would need to change it. So it helps planning for the upcoming audit. Um, it also helps in terms of supervision. So as the associate does work, and creates working papers, the senior can go in and review it. As the senior performs work, the manager can go in and review that, right? The partner then can come in and review it, so it provides the source for where all the review can happen, and it can be documented. Um, and then obviously all the different reviewers can look at it as well. And kind of the big one here, that's kind of in this supporting the auditor's opinion, is the idea that this is going to provide a basis if you ever get sued to show that you either did or did not exercise due care, right? And if you don't exercise due care, that's when you start opening yourself up to legal liability. Learning Objective 8 is thinking about judgment as to the nature and extent of documentation. We're trying to get to that sufficiency level, and ultimately, we should be able to show that we can feel comfortable with the financial statements, right, based on what the work was that was performed. And if we find some significant problems or issues, what do we do to address them, right? Were there some mitigating controls, for example, that made us feel better about a lack of controls in a certain area? Did we propose a change to an account balance, and did the client end up booking that change, right? Those are the things that we want to see in the documentation. Learning Objective 9 is what should be in the working papers. So if you've ever read the 10Ks, the first note in the 10K with the financial statements is the significant or the critical accounting policies and procedures. And so, just like that's really important for a financial statement, we're going to make sure we document all that in the working papers. We're going to spend extra time documenting complex and unusual transactions as well as estimates. We're going to document all the tests we performed and those results of the test. We'll talk about issues and doing the audit. Our list of proposed adjustments, and then what did management do? Did they agree? Did they make the adjustment? Did they kind of do a partial adjustment, or did they refuse to do an adjustment? And then obviously reviewing and things of that nature. The audit firm actually owns the working papers. There's been some legal cases that have established that, so it's not the client, it's the audit firm. There are confidentiality rules around who can see the working papers, both outside of the CPA firm and even within the CPA firm. And like I mentioned before, it's really important for legal liability. And you usually have a certain amount of time after you issue your audit report to finalize the working papers. Okay, and then if there's any differences of opinion with the client, then they would also be documented there, and that's an important important thing to note is that occasionally there are disagreements in accounting principles, and those need to be dealt with. All right, so our last learning objective is thinking about different types of working papers and how they're organized. Again, I'm not going to spend a lot of time on it because this is low, but you can imagine there's different levels, administrative things like the budget for the engagement, who's on it, the working trial balance. Then you have usually sets of schedules, and you'll have like a lead schedule, for example, for a given area. So we'll see an example of a PP&E schedule when we get to that section, and then you'll have kind of the supporting schedules that would go along with it. Any adjusting entries, obviously, as well. Um, yeah, so those are. Then we can have some additional working papers like a bank reconciliation is going to be an important one for cash. Working papers that redo computations, right? Like think about bonds and amortization of interest. We're going to have working papers that kind of address those computational challenges. And then any additional documents that we might be getting for the client, for example, where they're giving us evidence, those would also be in the working papers. And obviously different firms are going to set things up differently, but a lot of times you typically see kind of your current files and then your permanent files, things that you're going to roll forward from year to year. Um, you know, things that would be like the founding documents, right? The charter, the bylaws, um, board meeting minutes, uh, those types of things would be in your permanent file, and then obviously you'd have files that would change from year to year based on what you're collecting. Um, and again, there's different ways to organize them, but historically, you would have like the financial statements, you'd have a working trial balance that would uh, be used to create the financial statements. You'd have your adjusting entries that would have adjusted the trial balance, and then you have different schedules for different items, right? So you have a cash schedule, and then you might have kind of details related to that cash schedule. Same thing for accounts receivable or inventory or the different accounts. And so the point would be you'd have kind of a hierarchy that you'd be able to go through and figure out, or excuse me, be able to document all your work in these different areas. And then lastly, here's an example of a working paper. Granted, this was some of this is handwritten, although uh, firms have working paper software these days, and you'd be able to do similar things, whether it looks exactly like this on a given document or not. You would have a lot of these similar attributes, right, in terms of appropriate titles. It'd have the working paper itself, what work you did. You might have different symbols, right, for the type of audit work that you did, right? So these would be what you did. Footed just means that you're adding it up to make sure if you have a line of items that these all add up to what, for example, the suggested balance is. You have other symbols related to what you did as far as agreeing it to a general ledger, for example. These that got agreed. So the beginning balance, the ending balance per the ledger. Um, you'd have information around who's actually preparing, right? This. You'd have who reviewed it. The appropriate dates. Some kind of way to categorize the different working papers. And you might cross-reference other schedules. So notice this one says C5 and this says C, right? So you're going back to the lead schedule. If you looked at this these schedules here, this is how you could potentially organize it, having a lead schedule, and then all the supporting ones would have the same index, start with the same index. And so here's just an example of where you have this lead schedule of C, and you have a C5 here for this allowance to get back to the AR lead schedule. Okay, so again, there's going to be different software that auditors use, audit companies use, and to where it won't look exactly like this, but a lot of these features that we had from our back in the dinosaur ages when we had paper, working papers, still have just been incorporated into the software, right? So um, again, this is just an example of how of some of the elements that you would have in a working paper. Okay, and I think that'll do it for this learning objective.